Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello, everybody. I'm Ethan Feller, stock strategist here at Zacks Investment Research. And today, my colleague Kevin Cook and I have another round of top stock picks of the week. For my selection, I'm going to be looking at Eli Lilly. And so let's get right into it. So Eli Lilly is a leading U.S. pharmaceutical and biotechnology firm. They work on discovering, developing, manufacturing, and marketing medicine globally. In recent years, Eli Lilly has leaned heavily into the GLP-1 diabetes and obesity space. Its flagship products, Mounjaro for type 2 diabetes and weight loss, and Zepbound for obesity, have pretty much changed the healthcare landscape and dramatically shifted a lot of things going on in the markets. One of the reasons I want to highlight healthcare stock is that, after the equity market has run up for the last several months and really is just pushing higher every day, I think it's reasonable. And we also have the government shutdown persisting. So I think the defensive exposure of healthcare stocks might be an advantageous place to be over the next few weeks, in case the volatility begins to pick up. We can see healthcare sector has really underperformed this year until, it was really near its multi-year lows over the summer this year. But the sector has really picked up over the last couple of weeks. There was some encouraging news out of the current presidential administration, and I think investors may be starting to look for healthcare stocks that are look appealing at the current time. So Eli Lilly is, as I said, really changed the healthcare landscape in the last couple of years with its weight loss drugs. At its most recent quarterly earnings meeting, the companies shared that revenue in quarter two 2025 increased 38% year over year to $15.56 billion, and earnings per share climbed 92% year over year to $6.29 per share, driven by volume from Zepbound and Mounjaro. Eli Lilly has been one of the stronger stocks in the healthcare sector as it's picked up over the last few weeks. And, that deal that really was a bullish catalyst for the sector was that the Trump administration had struck a deal with Pfizer. And in exchange for cutting drug prices, Pfizer would be getting a 3-year tariff relief package. And this was broadly bullish for the industry because it's seen as a template for other drug makers, including Eli Lilly. And I think market participants will be watching closely to see if there can be a similar one for such a high-profile company like Eli Lilly. The deal also opened up opportunities and a path for direct consumer sales and discounts, with several big pharmaceutical firms announcing plans to sell drugs directly to patients at lower prices and skipping some intermediaries, which would be a significant boon to the bottom line. Meanwhile, the administration has floated 100% tariffs on branded and imported pharmaceuticals, but firms building manufacturing capacity in the United States, like Eli Lilly, appear to be exempt. So this reduces some of the risks and some of the downside for Eli Lilly. Additionally, Eli Lilly is preparing to launch its blockbuster drug, Mounjaro, in a handful of emerging markets, including India, Brazil, and Mexico. And it'll just be another huge market opened up for the company. Another news catalyst is that the oral weight loss drug version of their weight loss drug is being fast-tracked by the FDA for approval. And, currently to take the medicine, you have to take a shot. So offering an oral option, is just going to be a more popular version. So those are the news catalysts. Let's take a quick look at the fundamentals. You can see that it currently has a Zacks Rank 3 rating, which indicates a flat earnings revisions trend. However, it is near the top of the Zacks industry rank, the top 9%, number 21 out of 243 industries. Even though it has Zacks Rank 3, it has seen some slight revisions higher to its earnings estimates, although not enough to, push the trend high enough to keep the Zacks rank 1 or 2. But you can see they've been edging higher slightly. Because of the stock price corrected pretty significantly from its mid-2024 highs, the valuation has become much more reasonable and really makes the stock a lot more appealing at current levels. We can see it's currently trading at 36.8 times forward earnings, and it has really strong earnings growth forecast. It's expected to grow earnings at 31% annually over the next 3 to 5 years, and nearly 35% next year. And the top line is expected to continue to grow very nicely. This year, sales are expected to grow nearly 37%, and next year another 20%, while earnings this year are expected to grow nearly 77% and 35% next year. So, for a company in an industry disrupting product, 37 times forward earnings is not so bad, especially with that growth. Now, what really drew me to the stock was its technical setup. A few months ago, I shared the stock near the bottom of this channel here. You can see Eli Lilly. These are the shares. It's been selling off basically since last summer. It's been having some trouble. And yeah, it had such a great run over the last couple of years, sort of fallen out of favor, fallen out of attention as well. But yeah, you can see it found this lower level of support and is traded quickly up to this upper level of resistance. It's nearly a $200 jump. And, obviously it would have been better to catch it here at the bottom of the range. But yeah, you're going to want to keep a close eye on this, $840 level. We might not break immediately through unless there's a pickup in volatility and market participants decide to rotate into defensive sectors like healthcare. But I wouldn't be surprised to see this sort of consolidate for another week or two before breaking higher, although we could just break higher as well. And if we zoom out a little bit, you can see Eli Lilly has gone on a really impressive run these last several years. And this is just a clear bull flag building on a longer term chart. And if you zoom out even farther onto the monthly, you can see shares had trouble closing below this lower level of support. So yeah, to me, this is a very bullish long-term setup. And Eli Lilly is very well positioned for probably the next few months, but really the next few years as well. So I think there's a near-term and long-term catalyst for the stock. That's all from me today. Kevin, let's hear what you have to share.
See, then my stock is Bloom Energy, symbol BE. I think they're going to be a critical player in the data center build-out as an energy provider, and a unique one. They're not nuclear. All right, so let's start off with the big picture. Power demand from AI data centers. Bloomberg data here, expecting that market to quadruple in 10 years to 1,600 terawatt hours. And, we've known this for at least a year. If you've been listening to Eric Schmidt, former head of Google, he testified before Congress in April before an energy subcommittee saying that we were about 90 gigawatts short of the energy we would need to fulfill the projected AI data center build out for the next 5 years. So we may not have a compute bottleneck, but we definitely have an energy bottleneck coming for the compute. And this, it affects the whole grid. So that's where Bloom Energy comes in. I'll show you. I got that off of Twitter or X, and here's what I posted in relationship to that. Until enough SMRs, which are the small modular reactors, nuclear reactors, from, for example, SMR, NuScale, and Oklo, before they come online in 2 to 4 years, Bloom Energy appears to offer an intermediate solution with their clean fuel cell tech that can be deployed in 90 days. This is key. These things can be deployed in 90 days. So they're an Oracle partner that was announced in July. So that's when the stock really started to move up. And we'll take a look at the chart shortly. And they just got a new deal in the past 10 days in Wyoming for a new 900 megawatt facility. So let's go to the chart. I've got Oklo up here first. So we'll just talk about Oklo. $20 billion company. Stock has ramped just as much. I was looking at here at 95 thinking, oh, this is a nice looking chart. But I couldn't buy it because they had no sales. Their first sales are expected to be $1.5 million next year total. I mean, it's crazy. So what's going on? Why is Oklo screaming? Well, first of all, the White House, the Trump administration, is pro-nuclear. They've initiated at least one program to support a nuclear build-out and revitalization in the United States. It also doesn't hurt that the Energy Secretary, Chris Wright, is a former Oklo board member. So there could be some shining graces there. All right, let's look at Bloom. BE. Bloom has soared as well. In July, it was trading $25. It's ramped here. We've been buying into this ramp up. After I learned about the Oracle partnership and what Oracle did on September 10th, I'll talk about that in a moment. We've got like an average of 72. And if it goes down to 60, I'll just buy more because I like the revenue and earnings growth here for an energy solution that is fast. All right, so what happened on September 10th? Well, you can see Bloom popped 14.5% on that news. That's when Oracle earnings came out, and Larry Ellison was true to his word. I did this interview for Market Watch. You know, the secret weapon, not so secret weapon, is Larry himself. Because a year ago, he told us, hey, we have 162 data centers, 162. We'd like to have 1,000 or 2,000 more. It seemed sort of a whimsical thing to throw out there. But then a year later, on September 10th, he announces that his backlog just quadrupled to $455 billion with no end in sight. So, and Larry's not new. He didn't just wake up and last year and say, oh, I want to be in the AI data center business. He's been planning this since 2016 with OCI, Oracle Cloud Infrastructure, and knowing where this was going with machine learning and AI and the compute demand, that Oracle could play a key role. So let's look at the numbers, revenue and profits. Who has them? Bloom Energy has both. So I'm on the detailed earnings estimates page here. Scroll down here. Growing the top line at 20% to cross 1.75 billion. Next year, let's do another 20% plus. And this hasn't changed since the new 900 megawatt deal. So we don't have the new revenue estimates yet. Analysts are trickling in here. And profits, 50 cents this year, that's 78% growth. So this is nice to see on the margin front as Bloom ramps revenue 20%, they ramp profit 78%. And the outlook is just as strong for next year. $20 billion company. Let's look at the other $20 billion company with no numbers. And that's Oklo. You noted that Bloom was a Zacks number 1 ranked strong buy because of the numbers we just looked at. Oklo's at a number 4 currently. There it is. Virtually no sales, 1.5 million from one analyst. But I confirmed this by looking at one of the big bulls on the street, which is Wedbush. They just raised their price target for Oklo to 150. But in their model, they also have 0 revenues for 2026 because, the contracts that Oklo is getting, Oklo is also vertically integrated. They're going to own the power plant and then distribute the power that way. They're not just selling services. So that's why the revenues are so far away, like late 27, and obviously no profits. All right. Let's see what else I want to show you here. We looked at the Bloom and Oklo charts. I wanted to talk about price targets. A couple weeks ago, UBS gives a high street target of 105 for Bloom. Not gangbusters. Today, Evercore ISI initiates coverage with an outperform rating and a target of 100. Again, analysts aren't very excited here. There's a lot of price targets, 75, 85. And I think they're missing the big picture. I think they're missing the picture. So did we even look at the Bloom Energy site yet? I don't think so. So let's do that real quick. So here's Bloom Energy. Oh, by the way, come here. That pop-up give you a chance to get their mid-year report on the state of how they're addressing the power grid. So here's a sample of some of their stuff on a flatbed, very mobile. And the whole idea is they can deploy in 90 days. This is nice. Power lines down. What are you going to, if power is critical to your business, which it is for all the hyperscalers, and, you could say the Fortune 1000, then having access to these Bloom Energy fuel cells is important. So what is a fuel cell? They convert fuels like natural gas, biogas, and hydrogen into electricity without combustion can be installed and operational in as little as 90 days. And they come in all shapes and sizes, heavy equipment for the primary power grid, microgrid, and then off grid, which any company would be able to utilize. So check out their site. We talked about Larry, OpenAI, big announcement yesterday. They're going to build 6 gigawatts with AMD. And this is from September. Just, how OpenAI is a driving force. It's very unusual to have a private company driving so much industry innovation and competition. And we're talking about such a build out that it's impacting energy. For instance, here's a report from Michael Semmelist at JP Morgan, the data center blob. What is it doing? It has an insatiable appetite for energy. All right. And one last look at something fun here. So this is from Semi Analysis. And so Tesla's XAI Colossus 2 could be the first gigawatt data center if Sam doesn't beat him there first. Obviously, Sam and Elon don't like each other. They are those billionaire egos are in a big race for everything. They both want to have the biggest numbers. So that's part of what is driving this too. I mean, realistically, you have to think about that it's Sam versus Elon. And so here's Elon rushing to build his first gigawatt data center. This is obviously Zuck. I think this is the guy with the beard and glasses is supposed to be Dario Amodei from Anthropic. But needless to say, the race is on to build a compute. And so that's why I want to be positioned to own the energy, so to speak, and why I think you buy Bloom Energy here at 20 times sales, and those sales are going to grow. I think the stock will double in the next 18 months. I think we'll see Bloom above 150. But don't take my word for it. Just investigate everything I've shown you, and look to buy the dips. Thanks for joining us again in this week's Top Stock Picks. Come back here every Monday or Tuesday to get 2 of our best ideas. And if you want more of Zach's free research and insights and tools that only we have based on the Zach's earnings estimate momentum model, check out this week's promo at Zacks.com/promo. And we'll see you next week.